All right, welcome everyone to the 2024 trading plan. I'm Kevin Davey, KJ Trading Systems, and thanks for joining me today. This is a webinar that I do usually every year, I think it's one of my most exciting ones, or the one I get most excited about because people really get into it and the attendance is really good for it. And the funny thing about it's I'm not talking about entries or exits or strategies or chart patterns or that kind of stuff, because that's what usually people like to see. They like to know about, oh, well, how do I enter a market? That kind of thing. This isn't that. So if you're expecting that, um, you're probably going to waste the next 45 minutes to an hour of your time. This is about a trading plan and why it's so important for you as a trader to do this and to have this. So I'm pretty psyched up about this. Hope you are too. If you have questions, just type them in the chat box. I'll get to them probably at the end because they'll let me focus on the material here, but there'll be plenty of time for questions today. It is being recorded, so you don't have to worry about that. You'll get a link afterwards. Um, so that should be fine for you. Today's agenda. First, we're going to talk about developing a trading plan, a yearly trading plan. Then we're going to have questions and answers. And then we're going to do a PDF book giveaway. And that will be, you'll have to pay attention because it'll go to whoever answers a question correctly and is the right number of correct answer, the correct person. Okay. So first, our disclaimer, don't trade with money you can't afford to lose. Past performance is not indicative of future results. Treat all results as hypothetical and realize that trading programs are built with hindsight. And so when you see trading results, always be a little suspicious. Okay. And that'll serve you good. So real quick, let's just type in the chat box where you're from, and I'll read off where some people are from. I am in outside of Cleveland, Ohio. That was my view this morning on the shores of Lake Erie. You can't really tell. It's close to being frozen, sort of frozen. It hasn't been that cold of a winter, so hasn't really frozen, but you can see there's snow. And yesterday, though, the temperature was 5 degrees Fahrenheit, which is minus 15 Celsius. And with the wind chill, it was really kind of cold. So, um, I have a picture. Those aren't my kids, but um, kids all over Northeast Ohio, where I am, were happy because they got off from school because of the wind chill. It was too cold. And they actually might have off school tomorrow because of it's gonna be too much snow. I think they're predicting 6 to 10 inches of snow. So I'm just gonna rattle off where people said they're from. And it's all over. So this is really cool. Germany, Sweden, Toronto, Canada, the Philippines, and New Zealand, Montana in the US, Asheville, North Carolina, Los Angeles, or Louisiana. I'm not sure. It says LA. So it could be Los Angeles, it could be the abbreviation for Louisiana. Wake Forest, North Carolina, Buenos Aires, Argentina, Brazil, Long Island. Marcel says it looks the same here. He's in Germany, so he knows what this weather's all about. Southern Oregon, Orlando, KSA, Denmark, La Quinta, California, Poland, Philly, Pennsylvania, San Francisco, Quebec, Washington, D.C., Sweden, and there's probably people from other Mexico. All right, Dubai. Got people all over. That's awesome. I love to see people from all over the world, and that's kind of the way my course, people who join my course are all over the world. So it's kind of neat. You'll almost always find somebody in your area if you ever decide to join. And remember, if you have questions for me, um, please send me an email if you don't get the questions answered today. I'm pretty good at answering questions, but sometimes I miss them. And if I do, hey, just send me an email. I'm really good about answering emails. And I think a lot of trading courses, you'll talk to people and or you'll send them emails and you won't get a hold of them. They just won't answer you. I answer people. So I'm a little different. And DDA is in Geneva, Switzerland. He added his name. So that's pretty cool. Got people all over the place. Okay. So let's jump right into this. Let's talk about the trading plans. There's a whole bunch of different trading plans that you could and should have. So first, there's what I would call the big picture plan. How are you going to trade? Are you going to be an algo trader? Are you going to be a discretionary trader? Are you going to be automated? All that kind of stuff. Do you know how to build strategies if you're going to do algo type things? Uh, think about position sizing, money management. That's all part of what I call a big picture plan. And you definitely should know those type of things before you go trading. Unfortunately, what a lot of people do, or at least some people, is they'll say, hey, I want to start trading, and they'll go open up an account and then start trading without thinking of any of this. And guess what? Those people lose. Maybe you were like that, where that's how you started. Probably most people just get excited about trading and, hey, I'm going to start trading. And then they realize it's a little tougher than you think. So that's the first type of plan you want. The second one is what I would call an operational type plan. It would encompass things about running your trading business. And you might say, trading business? I just want to trade. You got to treat it as a business. Think about who you're trading against or who else is trading out there. There are all these hedge funds. There's all these just professionals out there. And guess what? They're trying to take your money. You're trying to take their money or someone else's money. But, it's they call it futures a zero sum game. For every dollar, if I'm long crude oil, somebody's going to lose a dollar. Okay. So you got to treat it as a business. And to do that, you really need to have a day-to-day operation. If you're kind of set up, oh, well, maybe you wake up every morning, you say, oh, maybe I'll trade today. Maybe I'll turn on my strategies, my automated strategies. Maybe I won't. That's not a business. That's like not even a hobby. You're just playing around. You've got to be focused and have what I call an operational plan. So that's the second plan. The third plan is a disaster plan. What happens when things go wrong? What happens when your power goes out, when your internet goes out, when your hard drive conks out in the middle of the trading day? You've got to think about these things. And it's all, again, kind of based around running a business. If you were running a business and that happened, what would you do? You got to know it in advance and then you're prepared for it. Oh, hey, the hard drive went down. Okay, switch to the backup computer. Oh, I don't have a backup computer. Oh, well, maybe I should get one. Or maybe I should get a backup hard drive or something. The point is, that's its own plan to deal with the anomalies that come up. And they do come up. Things do come up. You know, Probably the biggest one would be your internet goes out. Well, if you're an automated algo trader, what do you do? Do you call your broker and just exit all the positions? Do you go to a backup source? Those kind of things. Okay. And then the fourth one is what I call a yearly plan. And January is the perfect time to do it, where you figure out, hey, what do I want to do this coming year, the next 12 months to make my trading better? And what am I going to trade? And those kind of things. And that's a yearly plan. So that can tie in with all these other ones, but it kind of stands alone. And that's the one I'm going to talk about today, of figuring out where you've been and where you want to go in the next year. Okay. So somebody very famous and smart said the yearly trading plan sets the stage for what you want to accomplish and how you will do it in the coming year. So it's kind of your roadmap to where you want to be. And that's what makes it really cool, because you get to decide, well, hey, this is what I want to do. This is how I'm going to do it. And then, as part of this, when you make next year's plan, you'll go back to the previous year and say, well, did I accomplish what I wanted to? And that helps you a ton in becoming a better trader. And I think I've already mentioned some of these things, but here's some really good reasons why you do a yearly plan. Okay, let's say last year, 2023, was a down year for you. This gives you a chance to start fresh. Forget about what you did in 2023. Now you're going to start doing things maybe differently. Or maybe you had a great year. Well, the same thing holds. Just forget about last year. Start this year fresh. Now, obviously, you might want to keep doing some of the things you're doing, but uh, I've always run into problems anytime I thought, oh man, now I get it. I understand trading 100%. I'm never going to have another losing day, week, month, year, whatever. As soon as you start feeling overconfident, the market has a way of just slapping you around, just smacking you in the face. So that's another good reason to have a yearly plan. It kind of grounds you back to reality. And the reality is trading's tough. It's always been tough. It'll continue to be tough because there's new people coming in all the time. And, that's new competition, and you got to keep on your game. Think of it as if you were a professional athlete. What do professional athletes do before the next season starts? They spend a lot of time preparing for that next season. They don't just say, well, hey, last year I made the all-star team, so this year I don't need to do anything different. I'll be fine. No, because there's all these new kids coming up who want to take your spot. So, and trading's the same way. This is also a chance to remotivate yourself, um, and rededicate yourself. I always like doing these things because you get to say, okay, well, yeah, I had a good year, or no, I didn't have a good year. But in either case, you get to start fresh, and this is going to be a great year coming up, and here's why. So it's kind of neat. And this is all centered around a mindset of what I call CI, continuous improvement. This comes from business. I used to be in aerospace. We made fuel pumps for aircraft. We were big on continuous improvement. And there's really 4 steps to it. You look at what you're doing, your process, your trading process, your trading setup. You identify issues, you plan, and then you improve things. You look to improve things. Then you put those improvements on, and then you review them. And then it goes back again. And you just keep doing this. You're always looking at what you're doing, thinking about what you're doing, how it can be improved. And then where you want to improve it, you do it. And not everything works out. When I was in aerospace, sometimes we would do different kinds of preventive maintenance, and we found out certain things didn't work as well as we thought, so we got rid of them. But the point is, you keep trying to improve upon what you're doing. You don't rest on past success. And that's what continuous improvement is. And what you'll find if you do this month after month, year after year, you get better and better, which is obviously the whole key, right? And better hopefully means making more money or making more better risk adjusted money. You know, making money isn't the whole thing. It's also reducing your risk. Okay. It's kind of like if you were planning a trip somewhere, right? You're going to look at your map, but you got to know where you are now, where you've been. You got to know where you want to go. And then you put out a plan to get there, you know. And if you're taking a trip, it's going to be following the GPS guidance, right? As long as you believe it. But it's a similar type thing with the yearly trading plan. You got to do all those things. Okay. So, first of all, you want to review your previous performance. Then you want to see, where do you stand at the beginning of the year? What do you have available to trade as far as both money and strategies? And I didn't add it here, but also time. You know, let's just say you started a new full-time job. Well, hey, that's going to impact your trading plan for this next year, right? Goals and objectives, that's where you want to go. Hey, I want this return with this, no more than this drawdown. That's where you want to be. And you put it all together, where you've been, what you have available at your disposal, your resources, and where you want to get to. Put those three things together and you can actually come up with a plan. And that's what's really cool. And you notice, like right now, and so far, and for the rest of this webinar, I'm not talking about details of when the RSI gets overbought and the moving average is moving up, that's a good time to buy. That's not what this stuff is about. I mean, that's a lot more detailed. It would be, think about driving a car. Well, it would be, hey, what kind of car am I driving? What am I setting the temperature at so I'm comfortable on the drive? Those kind of details. We're not looking at that yet. This is big picture stuff. And, you know, if you think, oh, I don't need this big picture, actually, you probably need it more than most people, because the big picture is gonna, once you have that set, then you can get into it. I always tell people, it's kind of like if you were gonna start a business, a franchise restaurant, like a Subway or a McDonald's or something, and you bought it. You wouldn't go in and just say, hey, I'm gonna start doing this. There's a lot to it. Trading's the same way. There's a lot to it that's outside of the details of cooking those burgers, you know, or making that sub sandwich. That's the way you got to think about this. And that's what makes this so cool and really kind of unique. And I've never seen anyone else in trading education do this kind of a webinar. So um, you know, thanks for watching it, because it makes me realize that people there are treating this as a business. Okay, so let's first talk about where you've been. The easiest way is you should have access to these results. So here's just an example. This is a value added monthly index. It basically, what you do is you put everything back to $1,000, and then you create an equity curve based on your monthly returns. So in this particular case, this is just an example. It turned out pretty good. There was a flat period, and you know, maybe your goal is the orange line, where you want to go in 1 year, for every $1,000 you invested, you want to end up with 1,500. That'd be a 50% return. But that's it. That's what the professionals use to show their equity uh, performance. Now, it's not based on actual dollars. It's not, hey, I started with $22,452 and here's where I ended up. You could do it like that, but this just standardizes it to $1,000. But it's pretty important to do. So you could look, so you do this, get your equity curve for the year, however you do it, and then you look at it. Well, what's good about it? Well, in this case, your profit was good, your return on investment was good, but maybe you didn't like this long drawdown, maybe you didn't like it was flat. So those are things to think about. Okay, how can I improve that? And maybe example, you dig into what was going on here, and maybe you added some new strategies or something, um, and they didn't do so good. Who knows? Maybe you change your position sizing. The point is, once you see it, then you can evaluate, make sure that you take some steps to improve where you think you need improvement. Now, you could also say, on like this one, for example, hey, I'm fine with it. I started here, ended here, and then along the way, it went down a little, but hey, I'm happy with that. And that's perfectly fine too. Everybody's going to be different on what they think is acceptable and not. Okay. By the way, I can tell you that, whoops, try to go backwards here. Um, if you say, oh, there's no way I could handle, it looks like a 5-month losing streak, roughly, or a 5-month drawdown. Um, that's reality for a lot of traders. So don't think you have to have every month profitable. It's certainly possible, but in this particular case, you could have great performance with quite a few losing months. So remember that. Okay. So then what you can do is you can start breaking it down into strategies. So here's a list of just some strategies that I have. And I look at the 1 month, 3 month, 6 month, 12-month performance. And, first I look at strategies that did great. And I look at those, how are they doing? I also look at strategies that have not done great. And you can see in the stable of strategies I have, there's always a bunch that just don't do good for periods of time. So you want to look at that. You want to look at the strategies that aren't doing good and say, hey, maybe it's time to retire them, or uh, maybe something went wrong with them for some reason, but the point is, until you dig deep and look at that, you don't know where your weak points are or your holes are. So, for example, let's just look at this one. These are just some of the bad ones, but you can see there's an ES strategy, another ES strategy, another ES strategy. There's an NQ strategy, another ES, another NQ, and then two more ESs. Say, wow, okay. So the last 12 months, I had a lot of my bad strategies, you could say, might have been ES, or they might have been in the ags or whatever, but that would uh, help you out a little bit and help you understand what's good and what's bad. Somebody asked real quick, just to go back to this other chart. So I'll just go back there for a second. Whoop, sorry. It's there. Oh no, that's actually the one that went down. So there's some that did good. And so you could look at that too. And you could say, wow, look at, there's a heating oil, crude oil, heating oil, heating oil, unleaded gas, crude oil. You could say, okay, well, those are all, so obviously I have a lot of strategies that are pretty well tuned to energies. Okay. And again, these are just samples. Don't take these as gospel of hey, these are actual results. This is just an idea that of strategies and things to look for. Okay. You want to look at the good strategies and you want to look at the bad ones. All right. So part of this, where you've been, is you also want to include money management. So that was just what I showed you before was just the raw strategies. But if you dig a little deeper, you can discover other things. And what do I mean by that? Well, like money management. Maybe you did position sizing on certain strategies or all your strategies. How did that work out for you? Do you know? Do you know how much profit or uh, gain you would have had from the strategy by itself and then the strategy with position sizing? Can you tell me the difference? You should know it because you might find you're trading great strategies or good strategies and you're messing it up with position sizing. Or conversely, maybe position sizing helped you out last year and it made things better because you were doing good things with your position sizing. I don't know. And then the other thing you can discover is a huge one, especially for algo traders, are mistakes and errors. There's always going to be mistakes and errors. It's going to be you forget to roll over. It's going to be your internet went down in an order that should have been placed, didn't get placed. You should identify how much those things are costing you. And again, this is all part of just digging into this. And then once you know it, you can move forward. So I track different errors, slippage. I want to look at what I expected for slippage, what I got. I want to see what my rollover costs were compared to what I anticipated. When I add new strategies and turn them off, there's always going to be some errors. So I want to identify that. I also want to identify things I screw up or your trading platform screws up or you want to identify those things because you want to, again, in the name of continuous improvement, you want to get improvement on those. You want to get rid of those issues. And the only way you get rid of them is by first identifying. The way to think of it is, can I imagine how much better my results would be if I reduced my errors and things that I was screwing up? That's the way to look at it. So here's just an example of, I calculate slippage, my rollover costs, just other issues when I screw up or when TradeStation goes down, I use TradeStation, but it could be for any software, obviously. And then you can see where things fit and how it all works out. Now, you don't necessarily have to do this for the whole year. You could do samples of periods. Hey, I'm going to look at 3 different months last year and do it that way. It all depends. It depends how you want to have it set up. So screw ups, you can see I just list some of the screw ups I've had over the years, not necessarily all in 1 year, but I use TradeStation and sometimes I send uh, orders to Ninja Trader to execute at a different broker. And so, for example, I had an issue where Ninja got disconnected, and I don't know why, and things like that. And times when I screwed it up. And so you categorize all the mess ups, all the deviations from perfection. I call them screw ups. And then what you can do is you can attack them. Okay. And again, that's the big picture. Your goal is you want all those errors and issues to be close to as zero as possible. In this particular case, uh, it actually, I'm not sure how I added up those numbers to get something positive, but I actually did better than I would have expected. Oh, okay, I'm not adding all these. I'm adding the slippage, these bottom four numbers. So overall, I did better than I should have because some of the errors got balanced out with I was too conservative in my slippage estimates. Um, so that's what you want to do. And the big one are the ones you can correct. Obviously, rollovers, make sure you do it on time, and then the errors. And you keep track of the errors, and then what you'll start to see patterns, hopefully. You find the root cause, and then you put something in place. Now, normally what I do is you always get these oddball things that happen in trading. An order it gets missed. Okay, well, if it happens once on a strategy, I might let it go. But once it starts happening a third time or really a second time, I'll start to investigate because I want to prevent that third and fourth time from it happening. And that's kind of the way I look at it. And just think about that. I mean, it will improve your trading, does it not? It does. It definitely does. Okay, so you do that where you've been, what's working, what's not working. That's a great start. And somebody famous said, keep doing what you've always done, you'll always get what you always gotten. Einstein had a similar saying, something about insanities, doing the same thing over and over again, expecting different results. So, hey, if you want to keep making mistakes, well, don't record your mistakes, and then you'll keep making them. But if you want to improve, you're going to record them, you're going to figure out the root cause, and then you're going to take some action to fix it. Okay, so that's the first part of this yearly trading plan. The second part is where are you right now? So you take your capital, you take your strategies. I'm assuming you're more into like algo strategies, but maybe you're doing discretionary trading. The same thing kind of holds. You want to figure out what are you going to do this next year. And part of that is, hey, are you going to constantly be looking for new strategies? I teach a course, it's called the Strategy Factory Workshop, because I treat it building strategies as a factory where ideas come in on the left side, you test them, you do walk forward, you do Monte Carlo simulation, you do all this stuff, and what leaves on the right side is either a finished trading system or some garbage. And if it's garbage, you throw it away. But that's part of the process I use is even though I have strategies ready to go, I'm always looking at building new ones. And along those lines, that's you got to figure out where you want to go. So once you say, okay, I have this much capital, I have these strategies, I have this much time to dedicate, then you got to look at what kind of performance you're looking for. Your net profit, what are you aiming for? Got to know that, right? Got to know your max drawdown. My rule of thumb is whatever drawdown you think you can live with, divided by 2, because that's when you start to panic. So if you say I can handle a 50% drawdown, I can pretty much guarantee that when you hit a 25%, you're going to start getting a little anxious. And then it's going to go to 30% and 35 and 40. And you might not make it to 50. Most people can't make what they think they can make. And there's nothing wrong with that. It's just you got to realize it up front. So you got to figure out where you want to go. And the two biggest metrics are return and drawdown. As part of that, you also want to know when you stop. Either stop trading altogether or when you stop trading individual strategies. You want to know when that point is. And then as part of that, you got to know how much time you want to spend on this. If you've only got 5 minutes a week, my advice would be just put your money in some index funds and just let them go. That's 5 minutes a week. You can look at them. If you are serious about generating returns from futures trading, from trading strategies, you're going to have to spend some time doing it. 10 to 20 hours a week seems to be pretty good for a lot of people. Obviously, if you can do it full time, that's even better. But, when I started out doing this as a hobby, I was probably doing 10 to 20 hours a week. It became my only hobby. Maybe you'll be the same. Okay, so as part of this, you should always be looking at expanding your trading. Go out of the zone of what you've been doing and look at other things. Maybe you've been trading futures and maybe you want to look at options trading. Especially now with those zero DTE options, a lot of people are getting into that. That might be something you want to do. The big thing is, hey, do you have a budget to set aside for that? Either a budget for market losses, because chances are you're not going to enter something brand new and start making money right away, and it's kind of you're investing in your future. Or if you're going to take a course or buy a book, uh, you know, you should have some money set aside for that. And you might decide, hey, I need a faster trading PC, I need a speedier internet. That might be part of expanding your trading in the next year. It might be different types of trading software. I have TradeStation. Oh, I really want to learn Python because maybe I'll use that, or I want to go to NinjaTrader, or whatever. That's part of it. And of course, like I said, books, courses that might be out there. Maybe that's part of your ongoing development. Okay. All those help you with where you want to go. You got to have a goal for where you want to go with these things. And once you have all that, then you can put together a plan to get there. And that's the really cool thing. So let's just take an example. I'll just walk you through this. This is a template. If you're interested in the template, just send me an email and I'll send it to you. So, you start out with goals, and, one page of your thing just as a goal statement. Hey, I want to have 50% return on my account with a 25% drawdown, and it's going to be in these accounts, or however you want to do it. It's going to be futures, or it's going to be stocks, or it's going to be Forex or crypto, whatever. You have it written down. And then the neat thing is you can go back through the year as the year goes on and look at it and review it and touch base with it. Hey, am I on track? Once you write it down, it's pretty powerful, from what I've seen, that it becomes part of what you want to do. And that's kind of neat. So maybe you decide, hey, I want to invest in trading courses and that type of thing. And I have so much money that I'm going to spend in the next year on it. In this, I put $7,500 down, but maybe you have $1,000, maybe you have $10,000. Who knows? Everybody's going to be different. But the point is, if you want to do it, you should have funds too, and you should figure out, hey, how am I going to do it? How am I going to figure out what to do? And I list some ways you could search for credible vendors that way. As part of that, maybe you're going to read books or reports. I have a habit of just when I see these YouTube ads for, all these clowns for the most part, claiming, oh, hey, you should be doubling your money every day. Or I saw one, I think it was a Facebook ad where it said 11% return, 11.2% return per month, guaranteed. Whoa. But maybe you sign up for that just to see, hey, there's no way that's true, but maybe there's something you can get out of it. So I get a lot of PDFs of just their free stuff. And so I take a look at that. And maybe there's something that you hadn't thought of before. So there's both a lot of free stuff out there, there's a lot of pay stuff. But again, it's all learning new things. Um, maybe you want to say, oh man, AI is where it's at. And that's what I want to investigate. So uh, I think you can Google this IBM skills build. Uh, they have like a bunch of free courses. I'm taking one now on AI where it just kind of walks you through all this, and it doesn't specifically pertain to trading, but if you have a trading background, you should be able to say, ooh, this is how I could use AI maybe. And maybe you want to do that, or maybe you decide, yeah, AI isn't where it's at. But the point is, you keep expanding your universe of what you could do. Um, so I was just talking to a student the other day, and he mentioned a trading book that I didn't have, and he was telling me why it was good to get and how I might find it useful based on what he knew about my course. He had just started my course. And so, yep, I just went and bought it. And I haven't gotten it yet. I think I get it today. But maybe this will lead down new roads. You don't know. And that's the thing. You want to learn new things because you always want to be improving your trading. You might say, well, why? Why do I have to do that? Why can't I just keep using the same thing year after year? I'll give you a good example. The turtle traders, that everybody's heard of them. They were just a group of more or less ordinary people who two uh, traders decide to instruct and see how they would do. If would they follow the rules? Could they, trade successfully? And what they did was some of the traders did really well, these trainees, these turtles, and other ones didn't do so well. Some are still trading. So the point is you can learn a way, but then eventually that goes away because the turtle traders are not nearly as successful as they used to be. And they're probably a lot of them are doing different things now. So learning new things is all a part of this. So once you have that, you can create a plan. So here's an example. Hey, I want to build 20 strategies. I want to evaluate 20 strategies per month, and I want to get, one or two good strategies per month. That's my goal. So I just keep working towards that, and I'm going to use this process. That's a great way. You have it written down, and then you can track that. Hey, am I actually keeping up with this? And if you're not, then you say, why not? What am I doing wrong? So you write down everything you feel is important. Look at it weekly or monthly. See if you're on track. You make changes as your circumstances change. Maybe uh, you decide halfway through the year, nope, I don't want to learn anything new the rest of the year. I mean, that's totally legit. You could say, hey, my trading's going good. I want to focus on what I'm doing. So now your plans changed. But if you have it written down, you can just go and modify it and say, oh, I'm going to do this. That's perfect. And it kind of becomes your uh, operations manual for the big picture stuff. Obviously, the detail stuff. Hey, turn on TradeStation. Make sure trades are automated. Check your brokerage statement. That's all operations stuff too, but that's a little different. This is more, hey, top level type stuff. So if you need a template to just give you some prompts to help fill this out, just send me an email. I'll be happy to send you one. Uh, and then you can use that. Now, I've mentioned my workshop a couple times, so this is a little bit of commercial time. If you've decided, hey, this next year I really want to build strategies, I want to learn how to build multiple strategies in multiple markets and have a diversified portfolio, my algo trading workshop could be just what you are looking for. I've had students, they create strategies as part of our club. I evaluate them in real time for a 6-month test. And right now, as of the end of last month, we're over 600 strategies that students have created that, one, were built using the principles I teach, two, had nice looking back tests, successful back tests, and most importantly, three, had 6 months of real-time live performance. So people submit these to me and then I track them. So there's no cheating or anything else like that. So people are building successful strategies with the approach I teach. And I think that's been evident. I've won second place or third place 4 years in a row for the best trading school. And that's from the magazine Technical Analysis of Stocks and Commodities. So they have a yearly poll. It's called the Reader's Choice Awards. So I've finished second the last 2 years behind. I was tied last 2 years with TradeStation, and I think Thinkorswim was better for a trading school. And those are huge corporations. And so for me to be at their level, that says something about what I teach. And you can, I mentioned this earlier of, hey, if you're going to go look for somebody, you want to research it, go to Trustpilot, go look online and see what you can find about me or about whoever you're looking at using. Um, you won't find a lot of people or any with verified trading performance out there. And that's something I bring to the table. And then as part of the course, I give you 12 months of one-on-one email support. So you send your questions in, I answer them. There's a lot of other gurus out there, and I guarantee you'll never get a personal answer from them because they have a bunch of interns or third world people, non-traders who answer their questions. When you have problems, I help you. And that's huge. It's huge for your confidence as you're looking to trade, to know you can ask a question and get a straight answer from somebody who's actually has a good pedigree. Um, I also give you a whole bunch of strategies. And what happens when you get those? You can trade them. Some people do, some people just use them for ideas, but these strategies have all performed well out of sample real time. Most of them I developed 4, 5 or more years ago. So it's pretty neat. And then also, if you decide to join TradeStation, they have a 50% commission thing uh, where you can join with that if you are in a country that does not allow TradeStation, which it's a pretty small list, but there are, I think, Cyprus or Malta maybe can't use it. And the biggest one, I think, is Canada. Uh, the Canadian government is really strict on some of the rules for brokerages. So you can't use TradeStation. So what most of my Canadian students use, they use multi-charts, which is basically, it started off as a Russian knockoff of TradeStation. It's a pretty good platform on its own. I have it. They use that, or they get a trading partner in the US. There's some definite benefits with my course with some software I give you. It only works with TradeStation, but I have quite a few people who use multi-charts, and most of the code transfers over without a problem. Some of the performance gets a little different because you're going to have different data source, but for the most part, uh, they're pretty happy. And, I can answer a lot of the programming questions too. But if you are somewhere where TradeStation's available, you can get 50% commissions for life when you join up, and I can give you a code that makes sure you get that and get the best deal overall. Anyways, if you are interested, go to my website, kjtradingsystems.com, click on workshop, and then you can see the next live class. I do an all-day live class every 7 weeks or so, and the next one's a week from today, next Thursday. And then there's a whole library of material, probably, I don't even know, probably somewhere around 60 hours of material at least. Um, really good stuff. Usually it's overwhelming for a lot of people. That's what they tell me. But eventually you'll get there, and you just take it slowly, and you'll learn it. Um, so that's that. So why don't we do some questions? That was the commercial break. And hopefully you got a good understanding of the trading plan and the need for that yearly trading plan / review is the way I describe it. And if, like I said, if you want the template, just let me know. So what I'll do, a lot of people have been typing in questions, so I'll just start going through them. If you have questions, keep going. I will stay a little bit longer. Probably will stay no longer than 15 minutes after the hour. But hopefully I'll get to your question. If I don't, feel free to email me. Okay. So question, your books help me so much. I have two questions. How do you choose the in-sample, out-of-sample window size for walk forward? Bob Pardo mentions what he thinks. Is there a systematic way to do it without overfitting? Any particular recommended book? So this is something I teach in my course, and there's so I don't want to, I can't, it wouldn't be fair to students to give the exact answer, but what I can tell you, I'll give you the biggest tip. Don't try a bunch of in and out periods with your walk forward and then select the best one. Okay. And that's what a lot of the walk forward software, like TradeStation software, they do something called cluster analysis, which that's all it does, is it just looks at a bunch of results and picks the best one and says, hey, that's the best one. Terrible idea. So if you avoid that, you're going to avoid 90% of your problem. Okay. So hopefully that answers that. Second question is, how long should I forward test? In your book, you mentioned 3 to 6 months. I think I actually mentioned 6 to 9 months. And does that matter as far as the amount of trades I'm taking? What I found is 6 to 9 months seems to work really well, regardless of the number of trades and that kind of thing. So that's what I typically recommend. And there's obviously some performance it has to do during that time. Okay, and that was Ibrahim who asked that. So thank you. Sirkan, hopefully I pronounced your name right. Which hosting or VPS provider do you use to run TradeStation? So I personally don't use a VPS. or I've used speedy trading servers before, and that would be when I'd go on trips. But where I'm at, my internet is reliable enough that I can just let it run on my home PC 24/7, and I don't have to worry about a VPS. And then if I'm going away somewhere, I will log in with some remote desktop software. Um, in my course, we have a private forum that is, sort of like a Q&A area where people can discuss things. And there's been a lot of discussion from people all over about VPS because not everybody has reliable internet. And AWS tends to be a popular one, and some of the trading specific ones are also pretty popular. So I mentioned speedy trading servers. If you go to them, the guy who runs it's named Sam. Tell him that you got recommended by me. I get nothing for that, but uh, it'll make me feel good that to pass along some business to Sam. Okay, Saeed saying, what's the max drawdown that hedge funds use? If you look, and this is something I talk about more in the course of, when we talk about setting expectations, when you look at a lot of hedge funds out there, they have had huge drawdowns at some point in their history. And I'm talking by huge, I mean 50 to 80%. I would bet you even the successful ones, they have had periods of time where they've had what I would call like massive drawdowns. So it's something you got to realize. Trading's a high risk, high return market, and sooner or later you're going to hit those drawdowns. It's not all, hey, no drawdowns ever kind of thing. Okay, Saleh is saying, I followed your videos. I noticed your algo strategies are focused on futures. Any specific reasons for that? And what's your take on option trading using algos? Okay, so two parts to that. One is, yeah, I do futures. Why not stocks? Well, I do have a lecture in my course about trading with stocks. There's a couple problems with stocks. One is just the lack of diversification. It's a little bit better now where you might be able to trade some ETFs, although I don't know if you'll have the historical data for those. Uh, so futures allows you to be more diversified. You have your grains, you have your softs, you have your interest rates, your currencies. You got all these different sectors, which is really nice. If you're in the US, there's a huge advantage to tax treatment for futures with long-term and short-term capital gain. Basically, it's called a 60-40 rule, and I always get mixed up if it's 60% long-term, 40% short, or vice versa. But if you hold a stock for 1 minute, you're going to be taxed at the short-term capital gains rate, which is higher. But if you hold a futures contract for a minute, it's not going to be 100% short term. It's going to be a 60-40 split. So you actually would spend less on taxes. And then futures also has better leverage. You can be levered pretty highly, which is a double-edged sword, but that makes it nice. And then your second question about options trading. One reason people do options is to get the leverage. So I think I have enough with futures. I don't do it. But back testing is really hard with options because you have a couple things there. One is you uh, getting the data, getting good data. Just because you have a settlement price for an option doesn't mean you could have bought or sold there. Yet that's probably what you'll assume when you do a back test. And the other part of it is it gets so confusing and so many options, no pun intended, with options. And what do I mean by that? Well, let's say you wanted to go long something. It could be a stock, it could be a futures. You say, hey, I have a long bias. Okay, well, you can buy a call, you can sell a put, you can and then okay, I can do one that's going to expire next week, next month, next year. I can buy one at the money. I can buy one way out. And all those, and then you can start doing these combination options, butterflies, strangles, straddles, all sorts of things. And each one is going to behave differently. And how do you know which one's the best? So it gets really tricky. So I tend to stick just with futures. And then what I'm looking for in the back test is, hey, just buying and selling short, what works the best? And not having to worry about the actual technique you'd apply to the options to maximize your gains. So that's why I don't. Okay, Martin has a question. Is it possible? How would you take a passive index investor to learn how to trade, dedicate 10 to 15 hours a week to aim for a 50% annual return with the 25% max drawdown? Yeah, you certainly could. What you'd have to do, the process to take would be one, to learn a trading platform, two, to learn how to program in the trading platform where you could build your own strategies, and then three, learn how to properly build and test strategies. And then you put all that together, 10 to 15 hours a week. It'll take you a while to get up to speed, but probably in 3 to 6 months, you might be able to have some strategies that could get that type of return. That's kind of the way I would look at it. But if you really got to have a passion for trading and for wanting to solve the puzzle of the markets. If you say, oh man, that sounds treacherous, building strategies 10 hours a week, then it's probably not for you. And there's absolutely nothing wrong with feeling that way. But if you are challenged and want to be challenged by, hey, coming up with something that will work in wheat, the wheat market to make money, then it might be for you. So that's also part of it, is just having the mental background or the mental characteristics that you could do that sort of stuff. Francois is asking, he says we cannot use TradeStation. So I talked about that earlier. And if you want some specifics on it, let me know. And I can help with that. Jan saying, do you use TradeStation 10 or an older version for the training? So I use TradeStation 10 now, and I'm not at the most recent update of version 10. I keep it back a little bit, just because every time new software comes out, there's always some bugs and stuff. A lot of people still use 9.5. So my course has a lot of 9.5 material, has a lot of 10 material. And the big thing with TradeStation, when they went from 9.5 to 10, they changed a lot of their menu structure and stuff, but the basics are still there. It might, I might show you something in 9.5 and you might say, oh, well, how do I do that in 10? You might have to kind of figure it out. But generally, I have people who use both. Okay. Okay, so, and Francois says, what's an algo trading specifically? If the close is above the 200-day moving average, buy next bar market. And if the close is below the 200-day moving average, sell short. And if those were your rules, you program them, you run a back test, that's an algo. It could be as simple as that. Then you could do things like putting a stop loss and all other sorts of things. But that's the basic thing. It's just rules to trade by. And you program those rules and then you follow them exactly. There's none of this hemming and hawing. Like I've seen this in trading rooms where there was this one clown who, and I say clown for lack of a better word, I don't want to call him a scam artist, but he would be looking at a chart and he'd be like, well, there's this double top. The market could go higher from here or it could go lower. And then there'd be silence for like 30 seconds. And then he'd come back and he'd be like, the market would go down in the meantime. And he'd come back and he was like, oh, I just got out of that short trade. And you're like, what? You didn't say you were doing it. You said it could have gone either way. When you make an algo, There's no wishy-washiness. It's either bam, it's going to go long, it's going to go short, or it's going to be flat. So that's what's neat. Um, Jan said any promo code for the training. I'll be sending out some emails afterwards, so um, just check that, and I'll leave it at that. So you'll be happy, Jan. Okay, Sirkin's asking about strategy correlation analysis. How do you analyze it? I have a whole bunch of stuff in the course on correlation because there's a lot to it. And there's something, so I can't really explain everything in there, but realize there's always some hidden correlation too. So there's numbers you can calculate, but that doesn't tell the whole story. And I talk about this in the course where a lot of people say, oh, well, I had these strategies and the correlation coefficient's real low, so therefore I can trade them all. Well, you got to watch out for that. And I explain why in the course. Okay, does my strategy class cover OOEL? And people are like, what's that? It's called Object-Oriented Easy Language. And my answer is no, because usually, well, I'll say no for the most part. I do use that a little bit in some of the things I use. There's some software that I give you that was written by a student of mine, and that uses some OOEL, but you don't have to know it. The problem with this, it's object-oriented easy language. It's like the next step up. You can't really back test with it. It's better for uh, live trading, people who do that stuff. But if you want to back test, you still want to use the old easy language. You can't really use some of the object-oriented stuff. Brian saying, any suggestions on books to review for algo trading introductions? Actually, I've written a book. If you go to Amazon and type intro to algo trading or type my name, you'll see that's one of the books I wrote. It's the Kindle version's like $3. That gives you a good background. It asks you questions of, hey, should I consider this? What do I need to know, kind of thing. So I would look at that. Okay, if you do have questions, I would probably just stop them now because I want to get, there's still a bunch I want to get through and I want to get you guys out of here by 15 after. Okay, Christoph saying he wants to enroll in the course and he's going to build a Python application. And he gave his email, so I will be in touch with you, Christoph. What average profit per trade is considered good? And that's Nishat. For futures, for the standard size futures markets, now there's a lot of micro ones. I think you're in good shape if you're and you're doing some kind of swing trading, not scalping, because scalping is a whole other animal. I avoid it, but if you averaged about $50 per trade on average after slippage and commissions, you're probably pretty safe. If you run a back test and after slippage and commissions, you're at $5 average profit per trade, one or two mistakes is going to mess you up. So watch out for that. Okay. Okay. And Sirkan says, thanks for the company with a name. That was Price Speedy Trading servers. John's actually a student, so hey John, what is the lowest time frame you or the club strategies have used? I go down to 1 minute, and so I have had strategies at 1 minute. Those get kind of tough to do though. It's easier to do daily ones in 1 minute. As you know from the class, I talk about that a lot. Martin says, how much capital does somebody need with a close to zero probability of losing money? That's a tough one because it depends. There's a lot that goes into it. It depends on the strategies you're trading. It depends on the markets you're trading because there's going to be an initial margin requirement. But I mean, you say a close to zero probability of losing money. Then you're talking, well, are you talking losing daily, monthly, weekly, yearly, lifetime? I don't think there's any kind of trading that has close to a zero probability of losing money. I mean, you're risking money to get a bigger return. So, if you want zero probability of losing money, not counting inflation, the way to do it is just to put it in an interest-bearing account in your bank, right? Or a money market account. I mean, I hate to say that, but anything above that, you're gonna have a risk of loss. Okay, Chris is saying, where would you suggest we get our data? So if you're with TradeStation, they have all the data you need. There's also, if you don't have TradeStation, there's CSI data. There's some other firms too that have futures data, so you can find that. But I use TradeStation's data. It's not perfect, but it's pretty good, and it's included for a lot of people at zero or very little cost. Okay, Ibrahim has a question, and we're gonna get, by the way, we're still gonna get to the book giveaway, so stick around for a few more minutes. Okay, I want to copy my trades to Forex prop firm. If I copy signals from TS to MT5, I don't even know if you could do that. Would the strategy still work? CFDs, I can't even look at data for those. It's illegal in the US. I don't know if you could run signals from the NQ and be successful with a CFD. And CFDs and prop firms, yeah, that's just a whole nother can of worms that is out there. He says, please share your views on prop firms. For the most part, for most people, 90% of people, I bet, prop firms, you're basically paying to trade on a simulator, which used to be free everywhere and probably still is. But people think they're working for a prop firm, and all it is a paid simulator. You're paying for that. And they make the rules so difficult that you usually fail. Or if you pass it all, you'll get funded, whatever that means, and then you'll get knocked out for some reason. So I guess if you have no money to trade with, it is an option. It is a route you could go, but um, I don't know. It's tough. Continuous contracts are better than monthly rollover. Well, continuous contracts have rollovers in them, and it depends. The rollover depends on the particular market. So energies roll every month, but things like currencies and stock indices, they roll every quarter. Okay, a couple more questions and then we'll go. Okay, what does it take for you to stop having trust in your algos? I talk about this in the class. You put in some things up front to say, hey, if this happens or if this happens, then I'm going to stop trading that strategy. That's the easiest way. Martin's, he clarified losing all the money in the account. Well, I mean, if something bad enough happens, you could lose no matter what you were doing. So just to give you an example, there were a lot of people, this was, I don't know how many years ago, where the Swiss franc was pegged to the euro by the Swiss bank. And for a couple of years, people were trading it as if it was pegged. And then all of a sudden, one day at like 4 in the morning Eastern time, the Swiss bank said, nope, no peg. And the market just collapsed. And there were a lot of people who ended up having their accounts blown out and owed money to their brokerage. So uh, there is always a chance of loss. Last question. Uh, how should we identify if we should go 1 to 2 R profit or 1 to 1? You test it. There is no perfect risk to reward ratio to use. You got to test and see what works out to be the best. Some people say, oh, you got to have a 3 to 1 or a 5 to 1. They don't know what they're talking about, because that's only part of the equation. Winning percentage matters too. And I talk about this on my website in a few articles and stuff. So you might want to look at that. All right, let's go to the question first. Make sure you check out my YouTube channel. I have lots of videos there. I think I talk about this reward to risk somewhere in a recent video. Just in YouTube, just type my name in Kevin Davey and you'll see it. All right. So we're going to have a question here, and I'm going to give you all 4 books to the first 3 people who answer the following question correctly. So you got to be 1, 2, or 3. So I'm going to go 3, 2, 1, and then if you get it, you got it. Okay, ready? 3, 2, 1. When planning 2024, what should you not do? A, review 2023 performance. B, create plan for 2024. C, agonize over the mistakes of 2023 and beat yourself up. Or D, budget for outside help. Okay, the correct answer, and everybody's getting it. So that means at least you guys were paying attention. So I appreciate that. It was C. So the winners, Larry F. I'm going to write down your names, but I'll give you some instructions in a second. So Larry F was number 1. Bob B was number 2. And Robert C was number 3. And everyone else, you were a little too late, but a couple people said budget for outside help was the right answer, and that's not. Remember I mentioned, hey, if you think you need books, courses, put in a budget for that and use that. So that seems to be the most popular answer that was incorrect. So that's it. It goes to a black screen and my voice starts to fade out. No, my voice is not fading out. But hey, I want to thank you. And you will be getting an email with the recording. And so check it out. And also a link to my workshop. Check that out. And maybe you'll see a special come up. And my next class is next Thursday, but I want to thank you for attending. If you like this, just send me an email and say, hey, I really liked it. If you didn't like it, send me an email. Let me know. I love hearing feedback on what people like and don't like. All right, with that, I'll let you guys go. And thanks and happy trading.